Hello and welcome back to Dukascopy TV. London Direct is back, not so much by popular demand, but I'm back here anyway. I'm here to bring you more interviews from the most important financial centre in Europe. And of course, there's only one topic to talk about at the moment, and that is the oil price. And I've been to Alpari. I'm speaking with Craig Erlam. Well, Craig, it's good to see you again. It's been a while. Oil clearly is the main story in the markets at the moment. We know what OPEC thinks. They had their meeting in Vienna recently. So why do we continue to see this downward pressure on the oil price?
Well, I think one of the things we've got to look at with oil is the fact that I think at some point everyone seemed to think that we were going to eventually see that cut to production. So almost when we were seeing these declines in the oil prices, the reason we weren't seeing it hit the 50, 60 levels, which we're now looking towards, we were saying around the 70, 80 levels, because people were thinking that we're hitting these lower levels now. So therefore, eventually someone's going to have to blink first, cut production, because it's getting to a point where these countries can't continue to run a deficit like this for too long, especially the higher the countries with the higher production costs. Of course, you've got this countries like Kuwait and the Saudis who have got lower production costs, so can afford to sustain it for longer. They've got a lot of cash on the side from the last few years when these prices were at very high levels, and the Saudis were continuing to pump additional oil in order to try and cap the amount of the oil prices. But then you still got a lot of these countries who's just the production costs are too high. So I think everyone was expecting someone to blink first, and that never happened. And then on top of that, we had demand continuing to fall. Today we've had again another forecast for next year saying that demand's expected to fall further than they were anticipating. So again, that always weighs on oil prices. But I think the OPEC meeting actually last week, the week before, when they failed to cut production, I think that was a big moment, and that was when people really realistically started forecasting $40 to $50 barrels, because it was at that stage that you realised that no one wanted to give up market share, and it was going to be a battle right to the very end.
Do you think this is just the new norm that the market's going to have to get used to? Because you're right, we know the growth story for next year. We pretty much know what China's going to do. Europe's not looking particularly great. Obviously, the US has got its own oil anyway. Given that, and given that OPEC's not budging on their output and don't have a meeting until June, I think, is this just going to be the new norm over the coming months?
Well, I think there is going to be a consistent battle going on, but I don't think we're going to maybe hit that $40 level that people have been touting. I think once we start to reach that 50, I think someone is going to have to give up. We're looking at the US shale industry, one of the real causes, I guess, behind these lower oil prices. We've got a lot of smaller private firms here pumping this shale gas, but their production costs are a lot higher, and they've also got massive debt burdens associated with them as well. And it's reaching a point now where they're not going to be able to go into the markets to raise this money via the debt markets because of these lower oil prices and how much it's impacting their bottom line. So we're going to have I think we're going to hit a point around that $50 mark, maybe slightly below, where we're going to have to see the US shale industry actually cutting production. And if not, we're going to see a lot of these firms, the smaller firms, running into a lot of difficulties. So what that may lead to potentially is some consolidation in the US shale industry, because like I said, there's a lot of smaller private firms here. Otherwise, we're going to have to look at countries like, I don't think Russia's going to necessarily blink first, because I think you look at Vladimir Putin, he's never been one to back down against any fight whatsoever. Even if there's no fight there in the first place, he'll cause one just so he can stand firm against it. But I think when you're looking at the other OPEC countries, I think there's going to be a lot of pressure on the Saudis. Yes, they can deal with this for now. Yes, they've got this big cash pile that they can afford to let wither away very slowly, but the other countries are going to have to start putting pressure on. There's also a few other countries as well, the likes of Malaysia, these smaller again oil producers, who are really struggling now. The currencies are taking quite a hit.
Let's finish off with some trading ideas for people who don't necessarily trade oil directly. What are the currency implications here?
Well, I think there's a few currencies which have been really in focus. Like I mentioned there we've got the Malaysian ringgit is just one of these unusual currencies, one that's not overly traded, but we've seen some huge moves there. It's trading at multi-year lows. The Russian ruble is another one that's really taken a hit. The central bank here is making great efforts to try and stabilise the currency. We saw even today 100 basis point hike in interest rates, and the ruble still fell. There's nothing the central banks need to be able to do at the moment moment to stop this one-way move. The dollar is just really strengthening against the ruble, and there seems to be nothing they can do about it. Of course, Russia's got worries aside from oil. They've got the political issues, which I think isn't helping. There's the sanctions which are being imposed. So I think the dollar-ruble pair is a really interesting pair right now. And again, it's just one that's not necessarily traded heavily, like the dollar-yens, like the dollar-Swissies. It's just not traded as heavily, but in fact, it's actually probably one of the most interesting and most trending pairs right now.
Well, thank you to Craig speaking to me from the offices of Alpari. We'll keep an eye on the oil price and what that means for the FX market, but for now, goodbye.